Hello everyone, welcome to another live stream. So hope everyone is doing well. We have had some major moves in the markets. So we had the FOMC meeting, which didn't go that well, I would say. Some people didn't like it, the results. We also had the Bank of Japan interest rates. So of course, for all the news that you want to see, you can look at these boxes on the bottom of TradingView. How to find them? You go to settings and you go to events and you check this box, economic events. Okay, we can find that right here. So the Fed press conference, the FOMC economic projections, and the Fed interest rate. Basically, you have this is very important, but you also had the Fed press conference, which had some major information in there as well. Hey, Ivy, what's up? How are you doing? Hope you're well, traveler. I'm definitely here for this. What the heck happened yesterday with all the Forex pairs going bearish? Is this Baxter? Baxter, are you traveler? I think I remember your username from somewhere. Anyway, so what happened is we had a lot of news. Okay, we had this news event right here, which is really, really important with the Forex markets. Not just this, but on the JPY pairs, you also had EJ just broke the high. That's not what I wanted to see, but that's okay. You had the Bank of Japan interest rate decisions. So you had the Fed interest rate decision, so that is for the US dollar, and you had the Bank of Japan interest rate decision, which is for the Japanese yen. So the first number was as expected. So the previous was 4.75. That was the interest rate. Then the forecast was for a 0.25% drop. And that's exactly what we got. That was the actual number. But then in the press conference, Mr. Powell was not really that bullish on the US economy. He said that he wanted to be a bit patient and that he doesn't want to cut rates as extremely as people thought that he will. So people want the rates to be lower because that is good for the US economy. Okay, if the rates are low, that's good for the US economy, that's good for the stock markets. So because of that meeting, we had a large sell-off in the stock market. This is the S&P 500. We had a large sell-off in the S&P 500. Okay, so people did not like what Mr. Powell had to say. They wanted him to have some better projections for 2025. So it wasn't really about the interest rate decision that came in as expected. So that came in, the number was the same as the forecast. It was more about the press conference where Mr. Powell, the head of the Fed, okay, he said that he kind of wants to wait out the Trump administration. He kind of wants to see what will happen with the tariffs that Trump wants to implement. So he kind of wants to reevaluate the situation, and then maybe the cuts won't be as aggressive, and maybe the interest rate won't go down as fast as people thought, which made the stocks crash. Forex Sniper, pound crashing after bank rate while rate is the same. So let's check it out. Pound US dollar crashing down. Let's see. So we had the Bank of England as well. Okay, so that is pretty interesting news. We had the Bank of England news as well, and I'm guessing this is the Bank of England. It must be. I'm going to check the Forex factory calendar. That is a much more comprehensive, much more detailed calendar. Anyway, the previous was 4.75. Forecast was for the number to stay the same, and the actual number came out the same as the forecast, but still we had a sell-off. I do believe that some major forces are in place, such as the strength of the US dollar. Okay, so the dollar, if you take a look at the DXY, this is our dollar index. The dollar index is just going crazy and just gaining a ton of strength. So you can bet that every single currency that is paired with the dollar is going to go down. Okay, and that is exactly what we are seeing. EU going down, Aussie US dollar going down, pound US dollar going down. So the bank rate for the Bank of England doesn't really matter as much as the grand scheme of things with the dollar. What is going on with the dollar? Okay, let's take a look at a different pound pair. Even the pound Aussie is crashing, so looks like the pound is losing some strength. Again, I'm not really a fundamental trader. I'm more of a technical trader. I just am learning the basics of fundamentals, looking to possibly implement it into my trading analysis. So yeah, looks like something happened that the pound became very bearish, but it is not the interest rate decision because it came in the same. Maybe it was a press conference. Again, I would have to dig in a little bit to actually know what happened. But anyway, for me, as a trend trader, I just need the markets to go up or I need them to go down. I can make money both ways. What I don't want to see is I don't want to see this. I don't want to see the markets go flat. That is when I cannot make any money. So for me, this is great. I'm loving the volatility. I like this downtrend that we're forming now on the pound Aussie. I think this looks a very high probability for sell setups. And we're going to analyze this pair a bit more closely after my 6 main currency pairs. So if you guys have any more questions, great questions. I love it. Very interesting questions. If you have any more, put them in the chat. We're covering every single one. If you have any chart requests, definitely let me know. But now I'm going to give you my projections. I'm going to give you my, let's say, forecast after this massive moves, after this massive movement in the markets. For that, I'm going to jump on the euro and US dollar, and I'm going to go to the daily chart. I think that's a good starting point. And right here, we are very bearish. So this is a nice, strong downtrend. It is just, hey, Meg, what's up? I'm doing good. How are you? Big downtrend. And I am bearish. So I do believe that the dollar will keep gaining strength and that we will continue going down. Now, what does this mean for me as a trend trader on the 1 hour chart? So I use solely the 1 hour chart. I use solely the 1 hour chart to make trading decisions. So Forex Sniper, dollar interest rates cut 0.25%. Then why is the dollar flying? Well, the dollar is flying because of the press conference, okay? So people were listening in on the press conference right here. At the same time, when the interest rate decision was published, you had a press conference. And the press conference turned out to be bullish for the US dollar. And also you have to take a look at the overall trend. I mean, overall trend is down, and the markets are known to follow the overall downtrend, okay? So that is just what is going to happen in the markets. If you want to know more about this, I highly recommend, I'm going to put it up on the screen. I highly recommend going to Forex calendar. Let me share my screen. It's going to be easier. So let's do this. Stop sharing, present, share. Okay. So this is what you want to take a look at. Not the charts. Come on, this MacBook. This is the calendar, Forex Factory calendar. Very, very reliable, very detailed. It's great. I love it. You should spend a lot of time going through these numbers. And if you want to take a look at any of the news, so for example, if you want to take a look at the Wednesday news of the federal funds rate, you can also see that the usual effect, you can see the usual effect right here. That is pretty interesting. So when the actual number is greater than the forecast, that is good for the currency. Okay, and this time it came in the same as the forecast, but it all depends, to be honest, on the FOMC press conference, okay? So you can see more hawkish than expected is good for currency. And I do believe that the press conference was pretty hawkish. I talked with trader Nick about this, and his conclusion was that the press conference was pretty hawkish. And you can see the usual effect. More hawkish than expected is good for currency, and it actually was more hawkish than expected. And again, let me go back. I'm getting lost in all of these tabs I have opened. But anyway, people wanted to see that the Fed is going to cut rates in 2025. So they wanted to see the Fed have some aggressive projections for 2025 where they will cut rates aggressively. Turns out it's not going to happen as aggressive as people thought. Again, Mr. Powell is a bit more conservative. He is waiting out the Trump administration. He's being a bit patient, a bit careful. So the rate cuts may not happen as aggressively as people expected. Okay, so why did the dollar start flying? Because the press conference was pretty hawkish. Again, more information, Forex Factory, Forex Calendar, that's your best friend. Traveler, could it have been anticipated the outcome of the press conference would be bearish or 50-50? It was like 96% confidence or 98% confidence that the outcome of the interest rate will be the same. So it was like a 98% percentage or like chance that the interest rate will be the same as the forecast, and it did end up being the same. But for the press conference, I didn't see any projections for the press conference. I don't think anyone actually expected the results of the press conference as they turned out. So maybe it was 50-50. Again, I'm not really that deep into the fundamentals, so I cannot help you too much. I just kind of am learning the basics. Again, more information, more details is in the Forex calendar. This like super detailed. You can read up on all sorts of things there, and you can see the expected effect on the market. So if the result of the specific news event will be bearish, bullish, hawkish, neutral, you can see all sorts of things. Hawkish. Okay, so hawkish. Well, it's kind of tough for me to explain because I'm not a native English speaker, but let me try to see. Let me ask ChatGPT. I think ChatGPT should give a pretty good explanation. So, what does hawkish mean in the financial markets projections? Let's see if it can give us a nice, concise answer. Okay, so in financial markets, hawkish refers to a stance or approach by central banks or policymakers that prioritizes controlling inflation over promoting economic growth. A hawkish outlook typically implies that. I'm going to actually copy that. Post it in the chat if it's going to work. Okay, so yeah, you have higher interest rates. Number one, tightening monetary policy. And you have slower economic growth. So slower economic growth means the stock market is not going to go up a huge amount, right? So hawkish is not that great for the stock market because economic growth is good for the stock market. If Powell says he's aiming for economic growth, then this happens. But if he's saying that he's hawkish, then this happens. Okay, he's trying to basically work with the interest rates, and we do expect kind of higher interest rates. Anyway, Forex Sniper says hawkish means aggressive move and dovish means conservative move. All right, getting back to it. 1 hour on the euro and US dollar. So we were kind of here flat, expecting a decision. Okay. We were kind of expecting a decision, and expecting the meeting, and then we dropped after that. So we were range bound and now we're dropping. I was very keen on looking for sell setups right here. I definitely would have liked to see some sell setups at this point. I think this meltdown was pretty interesting and pretty strong as well, but we just could not commit. So we just bounced off. We got some pretty strong bullish momentum, and that just was not great. Okay, so the bullish momentum was not great. Now I'm patient. This pair actually is not on my watch list. I'm not seeing much potential. My main goal is for the bearish pressure to continue down. As I said, I'm bearish on the dollar pairs. I do believe we're gonna see dollar strength. Okay, so I do believe we're gonna see dollar strength, but I want to see the confirmation. I want to see the signature. I want to see another drop down like this, and then I would be looking for sell setups. So that would be my goal. If that happens, I will, of course, look to sell. Currently not printing anything interesting. Now, EJ is much more interesting. So as we had a reaction on the dollar pairs, we also had a reaction on the JPY pairs as well. Okay. Meg says, brother, can you say about a prop firm if it's a scam or not? Yeah, for sure. Put it in the comments and I'll take a look, or I'll give you my opinion. Anyway, EJ had some massive news as well. I would say not this. We have inflation numbers, okay, but this was pretty interesting. You had the Bank of Japan interest rate decision, which basically came in the same as the forecast. Meg says Lilu trading. Okay, so let me finish EJ and then I'll cover Lilu trading. So you can put it in the chat your main reasons why you're looking at that prop firm. Maybe top 3 reasons why you're looking at that prop firm. The number came in the same as the forecast, but looks like the yen is losing. Looks like the yen is losing a lot of strength and the euro is appreciating. I definitely like this momentum. This was looking great. It was looking very strong. Again, I'm a purely technical trader. I look for entries on the 1-hour chart, looking at only the momentum and price action formations. So I was looking for flags here. And we almost got a flag formation, pretty close, but then we never fully formed. And we broke the high. So right now we broke the high, retraced, which is not the best sign, but this pair is definitely on my watch list. I do believe it's a interesting pair. I like the momentum. I like that we are exploding to the upside. So I would like to see price continue up. If we can print one more big bullish candle, I would be pretty interested to look for buy setups, but it needs to be a big one. It needs to be really strong. Or if we can continue with the bullish pressure like this, I think that would be pretty interesting as well. So that is going to be the game plan, looking for that bullish momentum on the euro and the Japanese yen. I want to see some more momentum. Okay. And it is on the watch list. So that's for EJ. Next one, which I do like, is the Aussie and US dollar. Again, if we start on the daily chart, you're just going to see a massive sell-off for the Aussie and US dollar. Approaching this kind of, you could say, support level. I don't really trade support and resistance, but just kind of a bigger picture stuff. If any of you guys are interested, we have this low. For sure, it's going to be significant, but for my entry analysis, I don't take support and resistance levels into account. Anyway, so that's the daily. Massive sell-off, just dropping down and selling off. 1-hour chart, it's going to be the same thing. So I'm pretty bearish. I'm pretty bearish on the Aussie and US dollar. We were looking interesting right here, forming sort of a descending channel. Nothing came out of it though. This was a potential sell opportunity. that you could have taken. So right here, maybe some people were looking for an entry, so a quick break and retest. For me, I did not like this pullback. That was a big warning sign. So just this one candle, this blue candle was a big warning sign and definitely made me stay out of this trade. Okay. And then we had the news. So this move printed on pretty much every single dollar pair, this massive sell-off. And I was pretty, you could say, excited, although traders should not be excited. I was pretty excited because this was a pretty nice move. So I wanted to see a flag, or I wanted to see a pullback, break of the low with force, retest, any sort of a sell entry. Didn't happen. Instead, now we got a massive flag. This is a pretty big flag. It's not great. So you get the first low, first high, second low, second high. And this is a massive flag. So it's super big, and I really don't like it. Okay, the flag is too big. It has too much buying pressure. So it does not fit the plan. What do I want to see? I want to see momentum continue down. Let me check out any news that we have. Okay, we have some news right here. What is this? On Friday. We're going to have some news on Friday. But the big news has passed. The big news was the Fed press conference and the interest rate decision. That was the big news. So I want to see price drop down, give me a sell setup. That could be interesting. Until that happens, I will wait for the break of the high or the low. Why is it on the watch list? So why is the Aussie US dollar on the watch list and the Euro US dollar is not? Well, because the Euro US dollar is kind of coming out of this more flat price action, and Aussie US dollar just kind of looks more strong. It looks stronger. It looks more bearish. It looks more convincing to continue going down. Okay, it looks more convincing to continue going down. Now let me get back to Lilu Trading. I haven't heard of that prop firm, and to be honest, I would highly recommend staying away from that prop firm. Looks like a new prop firm. It's probably pretty small. The prop firm space has gotten very tough to get into. If you're not one of the big guys, if you don't have a well-established name, you probably rely on having very cheap prices, because that is the only way to survive. So if you're a new prop firm, you can have some magic marketing, but that's pretty much impossible. So you must rely on having very cheap challenge accounts. And having very cheap challenge accounts leads to problems with liquidity and leads to insolvency, leads to rejecting payouts, doing very shady stuff in the background, and closing down a couple of months after opening the firm. So they probably have very cheap pricing, and that may seem enticing to you, but I would highly recommend you stay away and you spend a little bit more money. Go with FTMO Trustpilot. I wouldn't trust Trustpilot. Okay, on Trustpilot, I think there's a lot of bots. I think there's a lot of fake reviews. I think there's a lot of fake incentives. So they basically give you a discount if you give them a good review, or they give you a free account if you give them a good review. So you never know what's happening in the background. But from my experience, I have been in the prop firm space for quite some time now, a few years, and every single small prop firm that popped up with cheap pricing went down and disappeared. So if you do want to go with them, definitely do pay by credit card, because then if they do scam you, you have a chance of getting your money back. If you pay by crypto or bank transfer, then there's no chance for them to get your money back. But if you use a credit card, then you can call your bank, tell them you have been scammed, and there is a pretty high chance that you actually will get your money back. That is what I recommend if you want to go with them. But my main recommendation is stay away, save some money, go with FTMO or the 5%ers. That's kind of the only two reliable prop firms that give you the best chance of actually reaching a payout and getting a payout. All of the other ones are probably doing some shady stuff in the background and probably won't survive to be here in, let's say, a few months or 1 year. So it's a very, very dangerous space. The new prop firms, they just don't have enough liquidity. They don't have enough liquidity to pay out their traders at all. And what is the main goal of new prop firms? Well, basically, they go in, they do some aggressive marketing, cheap pricing, they make, let's say, 100 grand, and then after 4 or 5 months, they exit, scam, and disappear. So yes, they make like 100,000. The founder makes $100,000, but guess what? That's because they scam a lot of people, and that's their main plan. It is a very short-term goal, and I do think they know what they're doing. I do think they know that they are going to be insolvent in 5 or 6 months, because it's impossible to survive when your competitors are FTMO 5%ers. Okay. It's impossible to survive with cheap pricing. The mathematics are just not there. You must have high pricing in order to survive, so that you can pay out the winning traders, and you must have good software to spot the guys that try to gamify prop firms, the scammers, not the scammers, but like the cheaters, the guys that do grid trading, the guys that do reverse trading. So you must have invested a lot of, let's say, money into the actual software so that you can spot all of these people that are not real traders. And small prop firms, they just cannot afford it. And don't trust Trustpilot, as I said. It's really bad. Trustpilot, I don't like it. I don't think it's. I do not think it's reliable. Traveler says, "Is this what you mean by a fake out?" No, this is not a fake out. This is definitely not a fake out. Is this a fake out? Yeah, it looks more like a fake out. So a fake out is when you get a big range, big flat range like this, and then you get a massive impulse in one direction and then a retrace like this, and after that you continue ranging around. See? So that is a fake out. This is a fake out. And again, it goes both ways. You can get the same thing to the downside. You can get a drop and then a retrace back into the range. That is a fake out. But what you're actually seeing on the dollar pairs right now, there is a little bit of movement. On the euro and US dollar, this could be a fake out. This could go back and range around. But on the Aussie, I think it looks pretty healthy. I don't think this is a fake out. I think this is a continuation of a downtrend, because we are overall moving down. So there is no flat range. And this is just a continuation of the downtrend. This may be a pullback before we continue down. So yeah, hopefully that clears up fake outs. Forex Sniper 5%ers is the reliable and trustable prop firm I love very much. I do think 5%ers is pretty good. I like them. FTMO and 5%ers are very old prop firms. They have paid out a lot of traders. I haven't heard a lot of drama surrounding them. So they're professional. They handle business professionally. They're not. They don't have a crazy CEO who is super loud on Twitter and talking shit on Twitter, which I do like as well. You must deal with a professional prop firm and not like a crazy child who has basically who rages on Twitter. That's not a good recipe. That's a recipe for disaster. So yeah, AJ. Whoa, AJ is looking pretty nice. How did I miss this? Damn, NJ is looking nice as well. Hey, this looks pretty good. Forex Sniper says, any support in Aussie US dollar? It's falling for 3 months. I'm not a support and resistance trader, so I don't care about the support and resistance, but there is some support right here on the 21st of October 2022. Okay, so you have some support. Are we gonna bounce? Maybe. Do I care? No, I don't care. So if on the 1 hour chart, an entry to sell forms right now and it's a high probability setup, I will take it without thinking twice because it fits my plan, fits my strategy, fits the way I trade. I don't care about the support and resistance, so I must follow. I must follow the plan. And I have seen a lot of trades work on the 1 hour chart that are right at support. So in my backtesting, I have found these major levels on the daily chart, and then I plotted them like this, and then I zoomed in, and we got an entry. Whoop. So we got an entry to sell on the 1 hour chart, and the entry would work perfectly. Okay, the entry would work perfectly. There would be no issue of the support. There would be no bounce, and it would be a massive, massive trade. So for me, I need to stick to what I know works, and I need to trade that. Okay, so AJ, daily chart, we're getting some movement, but it's not as good as the dollar pairs. If you compare, the Aussie US dollar has just been free falling, while the Aussie JPY has kind of been, sorry, just a second. So the Aussie JPY has kind of been flat, more flat right here in this area. So we're getting some movement on the 1 hour chart, but the daily, yeah, no worries, bro. But the daily is more flat. Zooming in, there was a sell setup you could have considered. I definitely considered it. Right here, this was a flag plus formation. One of the best formations, entry formations that I trade. It has a very high win rate. You had an ascending channel, which is a bearish pattern. You had a established downtrend, which is another bearish pattern. And you had this super clean flag plus. What is a flag plus? Well, you get the impulse, you get an inside bar that is inside of this candle. So high is lower, low is higher. Then you get an outside bar, the blue one. High is higher than this high, low is lower than this low. So the blue candle is kind of outside of the red candle, this small one. And the red candle, this one, is your entry. This did not fit the plan, my personal plan, because we got a bit of a slowdown. We got double wicks. Pretty big warning sign. So double wicks and the slowdown, I didn't like it. So it wasn't clean enough for me. Then we had the BOJ, which wasn't really a big reaction, but looks like after that, a couple of hours after that, we did get an explosion to the upside. We did get some massive JPY weakness. So that's good for me as a trend trader. Again, I just want the markets to go up, want them to go down. I hate when they're flat. So I don't like flat markets. If they're going up, if they're going down, it's great. That means that I can take some high probability trades. Okay, let me just check on NJ quickly. Okay, interesting. Now we're printing some very nice bullish momentum. At this point, I was very, very interested to look for buy setups. I liked this push up. We were also coming out of a V reversal, which is a bullish pattern. So a V reversal is a bullish pattern. And then we pulled back a little bit, didn't form anything. So we did not form a flag. We did not form a break and retest, but we continued up with some pretty strong pressure. Now this looks great. I think this is picture perfect. So we got the V. We got the massive push up. We got the pullback, no selling pressure, break of the high retrace, but again, no selling pressure, and then a continuation of the bullish momentum. So I'm super bullish. I'm very interested to look for entry setups. A flag or just pullback, break of the high, retest of the high, that would work as well. That would be pretty good. And that's going to be my game plan for the Aussie and the Japanese yen. Looks very interesting, and it is definitely on the watch list. We have the inflation rate news coming up. Am I concerned? Will I be more patient because of that? No, I will not. I don't think it's going to be anything super volatile. I think if we do form an entry, it's probably going to be after spread hours. And spread hours are from 9 to 11 p.m. London time. That is the time when the spreads actually expand. And you don't want to be getting into trades during spread hours. You could lose much more than you risked because the spreads expand. You get some erratic price action sometimes. And yeah. So most likely, I shall be waiting for after spread hours to get in on a trade if an entry forms. So if a high probability entry forms right here, I'll wait after spread hours and get in on some nice setups. Moving on, we have the pound and the US dollar. General picture seems to be kind of a little bit flat right here. I mean, the overall trend is definitely down. Definitely going down. But a bit of a slowdown right here. If I had to give my bias, I'm bearish. So if I had to give my bias for the pound and the US dollar, it would be bearish on the daily chart. 1 hour chart doesn't look that great. So I had my eyes on the pound at this point. So I was looking at the pound at this point. Why? Well, because we got a descending channel right here, breaking the lows, barely breaking the lows, and retracing. I think it looked pretty good. I think it looked pretty interesting. Nothing came out of that. So we just could not form anything. We continued to go up pretty correctively. That was pretty bad. Drop down after the news. V reversal. Abdullahi, hey, what's up? How are you doing? Yeah, you're a little bit late. So we started 40 minutes ago, but that's okay. I'm still going to live stream for a bit more. So if you have any questions or chart requests, definitely put them in the chat. The pound currently, what I'm seeing, we had the Bank of England interest rate decision. Nothing really came out of that, but it is dropping. I'm seeing a V reversal. So I'm seeing a V reversal. That's a bearish pattern. I'm not really going to put this one on the watch list. I don't think we are seeing clean price action just yet. I need a signature. I would need to see price continue down. I would need to see price continue being bearish, and then I would consider sell setups. Okay, so that is my game plan for the pound. If we get a nice drop, I will look for sell setups, and I'm seeing a bearish pattern. Of course, I have a bias. I have a bearish bias from the daily chart, which you can consider as well. I don't take it into account. I'm looking at only the 1 hour chart, but I can see that same downtrend on the 1 hour. See, if I squeeze out the charts, there is definitely a bearish bias. Definitely an overall bearish bias. Okay, now for something a bit more interesting, we have the New Zealand JPY. Looks like this current candle is not looking that great anymore. Do I have an order on right now? I do not have an order on to buy. Quick look at the daily chart. Same story as AJ. Same thing. So you could say we are overall stuck in a range, but that doesn't mean that we cannot get some entries on the 1 hour chart. So let's zoom in on that 1 hour. I did take a trade right here. So if you remember on AJ, when I was examining this setup, it looked a bit better. It looked a bit better on the New Zealand Japanese yen. So again, why did I take a sell setup right here? because I saw an ascending channel that is a bearish pattern. I saw a established downtrend that is another bearish pattern, and then I saw a flag plus formation. So you have the impulse, you have the inside bar, you have the outside bar, you have the bearish candle as the entry candle. Okay, pretty good, pretty high probability, small tight flag, no buying pressure. That's exactly what I want to see. So got in after spread hours though, because if you remember, spread hours are from 9 to 11 p.m. Okay, and this was during spread hours. So this was right around at 9, the open of this candle. So I got in on this candle, I think. When this candle closed, I got in on a sell setup. So it was somewhere around here and a bit higher. So I got in on a little bit of a better price. After that, got stopped out. So this was a loss, but the price did continue down. If I had a bigger stop, if I used, I don't know, 30 pips, this could have been possibly a winner because I would have taken half off at a 5-1, which we would never reach. Would we though? Okay, we would. So I would actually take half of right here. If you guys don't know, my new plan for trading the JPY pairs, because I've had free trades in the last 3 months that went into 5% profit on the JPY pairs, 5% profit, and then reversed all the way back up and took me out for break even or a loss. And that was rough. That was pretty tough to watch. So my new game plan is have a take profit set at a 5-1 and take 50% of the position off. Okay, so if I had a bigger stop, if I was in this trade, I would take half off at a 5-1. I would let the rest run with my trailing stop loss, and that would get taken out. So see, this is exactly what the JPY pairs do. So frustrating. I kind of hate the JPY pairs because of that, but again, it's the markets. And you cannot be a hater because then you will just lose money. So you must adjust to the markets. Hating on the markets, hating on currency pairs is not what profitable traders do. But sometimes it is very tough. It is very tough to watch these markets reverse all the way back up. So this is what happened 3 times to me. Is markets went into massive profit and then the JPY pairs, and then they reversed all the way back up and took me out. So yeah, that's the sad story. Now getting back to it. GT46, USD CHF. Sure, we'll take a look at the dollar Swiss. I'm pretty bullish on NJ. I do like it. And also, why did I take this sell setup but not the Aussie JPY? I think this one looked a little bit better. I think the slowdown here was a bit more defined. I think NJ looked a little bit stronger. And also, I didn't want to have double exposure. What is double exposure? Well, that is when you are in a sell setup on both the Aussie JPY and the New Zealand JPY. Those two pairs tend to move in tandem. And if I'm not like 100% certain in a trade, if a trade is not a 10 out of 10, well, then I don't want to have double exposure. I don't want to be in 2 sell setups if the trade is already kind of borderline, if that makes sense. Because if I lose, it's going to be a 2% loss and it's not a super high probability trade. If it's a 10 out of 10 no-brainer, if it's like a super high probability setup, sure, I'll take 3 trades. I'll take 4 trades. I'll take 6 trades. So I'll take 6 trades at one time on, let's say, 6 different currency pairs if it's a 10 out of 10 no-brainer. I actually had that happen this year. I think I took a trade on 5 currency pairs all at once. So I was in 5 trades. I was in 3 trades, but I wanted to take 5 trades, but I didn't have enough leverage because IC Markets offers only 1 to 30 leverage, and I didn't have enough leverage to take on 5 positions at once, 5 1% risk positions, so I took 3. Okay. This now looks pretty good. Retracing a little bit, not the greatest, but I would still take a potential pullback, break of the high with force, retest. That is why this is going to go on the watch list. If you guys are wondering, at this point, I was definitely looking for buy setups. I think this looked pretty strong. Did you take the NJ Flag Plus? I did. So if you're wondering about this one, I did cover it and I did take it. It was a loss. I took it with a 12 pip stop loss and I got taken out for a loss. It was pretty good setup. Pretty much like a 9 out of 10. Not a no-brainer, but pretty good. So we pulled back, broke the high a little bit, broke the low, continued up with momentum. You took the same setup. Nice. I think it was good. I think it was worth taking the setup. I think it was a high probability trade. But now it's starting to not look that good. So we had a little bit of a rough patch right here, a little bit of breaking the highs, breaking the lows. And now the current candle is retracing. So AJ definitely looks a lot better. AJ looks more bullish. AJ looks to have more momentum. My main focus has switched now to only the Aussie JPY. NJ is starting to slow down. What I need to see is I need to see the price continue up with conviction, continue up with a lot of momentum and a lot of force, and then I would consider taking buy setups. But I need a little bit more bullish pressure. This is just not that great right now. I mean, like 10 minutes ago, this was bullish. This was a big blue candle. It looked like this 10 minutes ago. So things can switch pretty quickly. So I just need to take care of the nose. But anyway, USD CHF, we can do a quick analysis. CHF. So I'm going to start with a daily. That's for me the best way, kind of a top-down analysis. I believe that's the name, top-down, if you go from the daily to the 1 hour. Bullish, of course, the dollar is gaining strength. This is no surprise. So I am bullish on the daily chart. Zooming in, finding any entries. Not that great. This doesn't look clean. This is not the sort of movement I want to see to be taking buy setups. For me, to take buy setups, I need to see some strong bullish legs with small pullbacks. This looks pretty corrective. We're kind of correctively breaking the highs, then descending, then ascending, then drop, then a range, then an explosion up, then a retrace. I don't like this price action. I would not have this pair on my watch list. If I was trading this live, I would just be patient. What about the AJ Flag Plus? Yeah, so AJ Flag Plus happened at the same time, and for me, I stayed out. I didn't take it. So I did not take this sell setup. Reasoning is double wicks right here and the slowdown and the double exposure. So 3 warning signs for me. I already set my eyes on NJ. I decided to take it. I think AJ looked a bit worse. I didn't like these double wicks. I think the slowdown was a bit stronger on the Aussie JPY. And again, I didn't want to have 2 positions running at the same time on a trade that I'm not 100% certain on. Okay, so before I take a trade, I give it a grade from 1 to 10. If it's a 10 out of 10, it's a perfect trade. If it's a 9 out of 10, I'm going to take it, but there are some warning signs. If it's an 8 out of 10, in most cases, an 8 out of 10 trade has too many warning signs and it is not worth taking for me. So I actually went into my data. I looked at my results from 2024. And in my trade journal, each time I gave a grade of an 8 out of 10, the trade lost. Okay. So if I take a look at all of my trades for 2024, and if I take out all of the trades that were an 8 out of 10, I would have been, I think, 4% I would have made 4% more. So I would have lost 4% less, okay? Because all of the trades that I marked were an 8 out of 10 before taking them have a net result of -4, if that makes sense. Okay. Now we have finished all of the 6 pairs that I trade live. I just want to do 2 more pairs that I'm currently backtesting. I think they're pretty active. I think they're pretty interesting. Yeah, no worries. No worries, Abdullahi. I think the pound Aussie is pretty interesting. We had this pretty strong uptrend. Not the greatest one, but still price was moving up. And this downtrend is perfect. So I really like this price action. I think this looks pretty high probability. I would definitely be looking for sell setups if I was live trading the pound Aussie. Either flags, break and retest, any sort of a sell setup I would definitely consider on the pound Aussie. Daily chart. Well, overall, it doesn't look the best. Overall, we are kind of flat. We have just broken out of this high, broke this high correctively, broke this high correctively. So you could make a case for a possible like huge ascending channel, but not really. So the daily chart doesn't look great. The 1 hour chart looks great. So, yo, Batman, what's up? Looks great, and I would be looking for sell setups. If you guys want to backtest a interesting currency pair, I highly recommend you backtest the pound Aussie. It has some very good setups. In the last 6-7 years, I've seen some pretty nice setups in my backtesting. US dollar CAD, we actually had a perfect break and retest. So if I was trading this live, I would definitely take this buy setup, and it would be a loss, unfortunately. So this would have been a loss. To me, it looks perfect. We have broken out of this huge range, started to trend up. There was some major dollar strength, but looks like now there is some dollar weakness on the dollar CAD front. That is interesting because on all of the other pairs we have dollar strength, but no, actually it looks pretty similar to the euro and US dollar. So we had a big dollar strength reaction and then a retrace. Anyway, currently looking corrective. I would not be looking for setups. Big picture stuff, dollar strength. So a lot of dollar strength on the dollar CAD. I think this looks great. Why do I have these things on? I'm going to have to remove the drawings. Anyway, so dollar CAD is super bullish. On the daily chart, super bullish. So my daily bias for the dollar CAD is bullish. On the 1 hour, pretty corrective. Unfortunately, this trade looked great. In my backtesting, I would definitely take it, but it just could not commit. So that's about it for Forex. If you guys have any requests for Forex pairs, definitely put it in the chat. Right now, I want to switch to some of the really popular instruments which have had a massive drop. Let's be honest, a big drop on the S&P 500. So this was the reaction to the Fed conference, Fed press conference, massive sell-off. I do believe we're still on pretty good track to go up. I am still pretty bullish on the S&P 500. A little bit of a key for me. So a key for me when the trend has switched is if we print 2 large red candles. If this sort of price action prints on the daily chart, I'm going to completely switch my bias. I'm going to start being pretty bearish on an instrument. So this current daily candle that is forming right now is going to be pretty significant because we already have one big red candle. See right there. this was a pretty big red candle, pretty bearish. And if the other one continues down like this, we still have 5 more hours. I don't think it's going to happen. But let's say it does happen, then I think the whole trend has switched and that we have a bit of a correction and that the possible bigger correction may happen. So right now, I'm still being bullish. This may be just one daily candle. It may just be one, like a once-off reaction to the press conference. We have the lower trend line. Again, we know that the S&P 500 moves in sort of channel formations. Really likes the S&P 500 really likes to respect trend lines. It has kind of broken the lower trend line now, so this would be the new one. So yeah, really likes trend lines, really likes moving in these channel formations. Zooming in, could there be any sort of an entry on the 1 hour? No, it's just a massive drop. It was just an immediate drop. Yesterday, during the conference, we had a massive sell-off. NASDAQ is going to look pretty similar. It definitely does. So my analysis is going to be completely the same on the NASDAQ. Gold. For gold, I do believe we're pretty much in no man's land. I think we're kind of flat and corrective. Let me just put this up. So if you guys can just like this live stream, it would really mean a lot. It would be good for the algorithm. And if you want to join our free Discord, definitely go to zentumtrading.com. You get some access to Zentum Trading, not the full access, of course, but you get access to the chat, to the forecasts, to the mentors. So if you want to join, the link will be in the description of this live stream. Go to zentumtrading.com and you're going to find our free Discord there. Have my alarms to check the charts, so let's do that quickly. Let's go back to my main Forex pairs. 1 hour chart. EU, still nothing. EJ, unfortunately retracing, so not looking the best. Aussie US dollar, still stuck between the high and the low. AJ, still good, still pretty healthy. Definitely looking for buy setups. Pound US dollar, continuing to drop. Looking more interesting now. If we can continue with the momentum and then get a sell setup, that would be pretty high probability. So that is exactly what I'm going to look for. It's going to go on the watch list. Maybe during spread hours, we can get a nice flag. So maybe we can get something like this. That would be pretty nice. And the final one is NJ. Not the best. I'm going to remove this one. I don't like this last candle. I don't like this break of structure either. And I just am not convinced that this has enough bullish pressure. So remaining patient on NJ. But the pound is turning out pretty good. Anyway, gold, daily chart, pretty flat in my opinion. Zooming in on the 1 hour, we didn't get any sort of entries. We got a flag right here, so you could have possibly considered a flag setup. It's not that bad. This flag looks okay. Anyway, not that interesting. Silver dropping down with a lot of force. Pretty bearish on silver. Yeah, dropping down with some very strong momentum right now. Yeah. So gold, neutral, silver, bearish. Bitcoin is looking pretty rough right now. So we have reached all-time highs. It was looking really interesting. So on Tuesday, we were at 108.5 or 108.1. Very good, very bullish on Bitcoin, but then we had a massive drop. Again, that was the reaction on the press conference. Bitcoin tends to follow the NASDAQ. Okay, Bitcoin is a risk-on asset. So if the stocks sell off, pretty likely that you will see a sell-off in crypto as well. Pretty likely you will see a sell-off in Bitcoin. Am I bearish on the daily chart? No, I'm not. Again, what is the bearish signature on the daily chart that I'm looking for? It's going to be two large red candles like this. That's going to be a pretty bearish indicator for me. So the first one has printed. The current one, it's not bearish, it's neutral. If this one prints like this, then I'm going to be bearish. So that means I'm still remaining bullish. If we take a look at a good, let's say, bull market right here, so you can see the signature starting to, you can see the large bearish candles. So that is kind of the signature that is going to be super bearish. See the sell-off right here, starting to sell off, and here we get a confirmation. We can also go back to 2018, was it? 17? Yeah, 2017 daily chart. Also, this was kind of the signature. So I would say these four candles were very, very bad. They looked super bearish. So that is my crypto indicator, okay? I'm focusing on the daily chart. If we get two big red candles, it's pretty much game over for the big uptrend, or there's a high chance that the market is gonna go in a big correction period. Anyway, Ethereum pretty bad. We have been pushing up, broke this high by a little bit. It was looking super bullish, but now starting to drop. Again, I'm still not bearish, still not getting those consecutive huge red candles, but definitely flattening. The momentum is dying down a little bit. Okay, it's dying down a little bit. Still pretty far off the all-time high at 4.8. So still pretty far away from the all-time high. DXY and US oil. US oil, I'm just going to skip. I don't like US oil. It's super flat, super corrective, super choppy. It's not doing anything right now. But the DXY is pretty important for us as Forex traders. And also, we're going to wrap up the stream in a couple of minutes. So if you guys have any last-minute questions, any chart requests, make sure to put them in the chat right now so that I can take a look, that I can answer and maybe break down some charts for you. This is going to be my final instrument that I have prepared for you today. And it is a good one. So it is the dollar index. It is on the daily chart and it is super bullish. So the dollar index has been crushing higher, just trucking to the upside with a lot of momentum, a lot of strength. The strength has kicked back in right here. So the strength is continuing, very bullish. My bias is for this to continue going up, and that would be great for my dollar pairs. As I said, if I need to repeat it, I don't care if we're going up. I don't care if we're going down. I just need the market to go somewhere. If the markets are flat, if they're corrective, for example, if they look like this, it's pretty tough for me as a trend trader to make any percentage. But if they look like this, that's great. Then it's game on. You have the big trend, and you're definitely going to find some opportunities on pretty much every single time frame. So yeah, zooming in on the 1 hour, maybe we get some clean setups. Not really. I like to focus on the daily chart when looking at the dollar index, okay? And just a disclaimer, so to make trading decisions and what we teach at Zentum Trading, it is all done on the 1 hour chart, and we only look at these 6 currency pairs, okay? All of my trading decisions are solely done on the 1 hour chart, and I do not take the DXY into the account. So this is all done for the live stream to make things a bit more interesting. But to actually trade, to actually extract percentage, what me, Griff, and Nico use is we use price action that we see on the 1 hour chart on these currency pairs. Okay, that is our specialty. My main advice is keep it simple. Looks like the pound is okay, doing nothing. My main advice is keep it simple. Keep it simple. don't have a lot of things on the chart. Focus on very few time frames. If you can focus on only the 1 hour chart, that is what we do. And that is why usually traders, like beginners, they have a lot of success when they're starting out. And then later on down the line, like a year or 2 years or 3 years down the line, they have problems. Why? Well, because at the beginning, they actually keep it simple. They have a simple strategy. They have a simple trading plan. They don't have a huge amount of things that they're looking at. And that enables them to make good percentage. But then they start getting bored. They start getting drawdowns. They want to overcomplicate. They want to add in a new time frame. They want to add in an indicator. They want to add in a refinement. That's when they usually ruin the whole strategy. Okay. So keeping it simple, focusing on only a very few things on the charts is the key to success. Okay. And I think it's a much better approach to keep the strategy the same, but maybe increase the number of instruments that you're trading. So if you could add in 2, 3, 4 more instruments that you're trading, that's going to increase your percentage, and it may make your equity curve more stable in terms of the drawdown. Okay, so it may make the drawdowns a bit better depending on how you do that. Okay, and yeah, so any last minute questions, put them in the chat. That would be about it for this live stream. Merry Christmas to everyone, because I'm not gonna see you guys. Meg, bye brother. Yeah, goodbye bro. Have a good night. It's 11 p.m. in India. So yeah, have a good night. Merry Christmas to everyone. Traveler asks, could you elaborate on what drawdown is? Yeah, for sure. I can. Let's do it. So drawdown. Okay, so this is your equity curve. So let's say this is 10K. So you're starting with $10,000. Let's say right here you are at, I don't know, 1,600. And let's say this is, I don't know, 20,000. So this is your equity curve. You're starting with 10,000. You're trading for, I don't know, 2 years. This is like somewhere like on the half of your trading journey. And this is after 2 years. So you managed to double your account, which is not that realistic, but this is just an example. So yeah, started with 10K, reached 20K, but you can see the drops, right? Notice the drops. So here, your equity can fall from 16K all the way to, let's say, maybe 14K. Okay. So you have lost $2,000, and that is the drawdown. The drawdown is these drops in equity. Okay. That is what I mean when I say a drawdown. That is the drop in equity. What is the biggest drawdown here? Well, according to this chart, the biggest one would be, I don't know, let's say here. This would be the biggest drawdown. Let's say this value is at around, let's put it at 13,000. Put this one a bit higher. And let's put this one at, I don't know, 11. Let's put this one at 5. So this would be your biggest drawdown. It is around $2,000. This would be the drawdown. You went from the top, you were 13,000, you were up 3K, and then you were up only 1K. Okay. You were up only 1K. That is the drawdown. If you want to take a look at another example, I can give a quick example on my trading results. So let me stop sharing this. my FX book. Okay, so give me 1 second, guys. My FX book. I see markets. Okay, I got it. So let me share the screen, present, share. Yeah. So this is my equity curve. Oh, come on. And this is the drawdown. See, from this point to this point, that's the drawdown. From this high to this low, that's the drawdown. Okay. And that is the hardest period that traders have when they're losing setups. When they're losing trades, that is the hardest thing to cope with. And yeah, hopefully that explains it. I do think we have some more questions. Traveler says, how do you cope or avoid stop loss? You cannot avoid it. So it's gonna happen. It happens to everyone. Like the best of traders have drawdowns. Everyone goes through it. There's no way to avoid it. It is just how the markets work. It is just how trading works. You can only cope with it. So you can only try to, let's say, deal with it emotionally. How to do it? The best thing to do during backtesting, for me, what works the best during the drawdowns is backtesting. So when I'm losing, when I have a losing month, and when I'm down, when I take a lot of losing trades, then I go back, I backtest, and I see that it's normal. In my backtesting, I get some losses, I get some winners, but at the end of the year, I'm profitable, and that builds my confidence back up. One more thing, psychology books, a great workbook that can help you deal with psychology and drawdowns and negative emotions and overtrading is The Mental Game of Trading by Jared Tendler. Okay, so you can read that book. It's a workbook. You're going to need to do some writing, but I think it's great. It's definitely worth it. That's one more way to do it. So backtesting is the number one way to build your confidence back up. Second way is to read books on trading psychology. Yeah, that's about it. Thank you guys very much for watching. Again, Merry Christmas to everyone that is celebrating, and I will probably see you guys next week on Thursday. If you want to follow the updates when I'm doing a live stream, everything is posted on my Instagram account. My Instagram is going to be in the description of this video, and the name is, it's Marcos Trading Journey. So the handle, I'm going to put it in the chat, Marcos Trading Journey. So in the chat, you have my Instagram handle, and all of the updates for the live stream are posted on there. Thank you guys very much for watching. See you guys next time.